Hello, welcome to Accounting Hub. I'm Professor George Scarping, PhD in Accounting, and our topic today is how to create and boost your credit score. And why it's so important because everything in the US is based on credit score. So a credit score tells lenders about your credit worthiness, how likely you are to pay back a loan based on your credit history. It is calculating using the information in your credit reports. And the most famous one is the FICO scores. That's what we will be talking about. Because FICO scores are the standard for credit scores used by 90% of top lenders. Credit scores influence the credit that's available to a person, you, and the terms, interest rates, for instance, that lenders may offer. It's a vital part of credit health. When you apply for credit, whether for credit card, auto loan, mortgage, or any other loans, lender wants to know what risk uh, they take by loaning money. When lenders order a credit report, they can also request a credit score that's based on the information in the report. So we have three credit bureaus: Equifax, Experian, and TransUnion. So these three goes on the FICO scores. So for low amount loans, the lenders take only one. For mortgage, for instance, that's much expensive. They usually take the three. And it varies a little bit from the threes, but they are not exactly the same, but basically the same. And they all use the FICO scores. So, how does it work? So, first, it goes from 300 to 850. So, it's not from 0 to 100. I have no idea why. So, the standard is from 300 to 579. Your credit score is poor. You will not be easy to get loans and credit cards. Fair, from 580 to 669. 13 of the Americans have a poor score, 17 a fair, a good from 670 to 739. Here on good, you can get some credit cards, some auto loans, and so on. Very good from 740 to 799. Here you are good. You can get mortgage loans, you can get a lot of other stuff. And exceptional, it takes a while to get it, from 800 to 850. And two-thirds of Americans have a good FICO score or better. However, how do we know our FICO scores? You can ask it once per year for one of the three credit bureaus, or you can go on your bank, on your app with your bank. Usually they show your FICO score, credit card. So nowadays there are a lot of ways to go, and also some apps about credit. They are not so reliable like the credit cards and your bank, but they are a good measure as well. And what is in your FICO score? And that is the most important one. 35% payment history, 30 amounts owned, 15 length of credit history, 10% new credit, and 10% credit mix. And what is the problem here? If you are not a US citizen like me, I am from Brazil, I arrived here some years ago, my credit score was zero because I have no credit score. That is even worse than have a poor credit score. And then I need to work on my credit score. And if you do everything right, it takes around 2 years to go on this very good credit score, or even a good one. So a good one, it takes around 1 year. 2 years, you go on the very good, and then exceptional, it takes much more time than that. But with a very good credit score, you are better than the median of the Americans. So you will be more it will be more than enough for you to have a very good life in the US. So how do you create, or if you don't have a very good credit score, how do you boost it? So here we will be talking about these 5 criteria and also some tips to boost your numbers. So the largest one, the payment history. What is it? The first thing any lender wants to know is whether you've paid past credit accounts on time. Uh, if you are a good customer, if you pay your bills on time, you are good to go. If you don't, why will I give you money? So this helps a lender figure out the amount of risk it will take on when extending credit. And this is the most important factor in a FICO score. So that's why it takes time. First, you need to get a payment to do, and then you need some time, and then the bureaus will start collecting this info. Making on-time payments on your credit accounts can help your scores, but missing payments, having an account sent to collections, or filing bankruptcy could hurt your scores. And what is worse, could hurt your scores for years, at least 2 years, because this is the minimum amount of time that they keep your records. So if you have an account sent to collections, 2 years of bad credit score, it will hurt your credit score badly. So pay attention, guys. This is the most important. And then account types considered for credit history could include credit cards, Visa, Master, Amex, Discover, Benefits, or any other one. Retail accounts, credit from stores where you shop. This is not so common anymore. Usually the stores go with the credit credit cards, but there are especially furnitures and so on that you can go on these retail accounts. Installment loans where you make regular payments, like car loans. That is a very nice entry port here. Finance company accounts and mortgage loans. What is the most important one? What does not include rent, utilities bill, uh, debit card, because it is not, you don't pay your debit card. So you need to have debits to pay them. A rent is not a debit. If you don't pay your rent, you are out. Utility bills, the same. So it is based on, if you are a newly arrived in the US, credit card and car loans. These are the most important. So if you are a guy that goes on ATM, withdraw your money, go to the grocery stores, pay everything on cash, you will not have a payment history because you are not paying anything. So be careful here, okay? We will be talking more about this, how to open accounts and so on, soon. 30% amounts owed. Having credit accounts and owing money on them does not necessarily mean you are a high-risk borrower with a low FICO score. Because, okay, I need to pay debits, so I will owe money. So we need a balance here. And it is 30% of your FICO score. However, if you are using a lot of your available credit, this may indicate that you are overextended. And banks can interpret this to mean that you are at a higher risk of default. Five factors that the amount owed category looks at. First, amount owed on all accounts. So they combine all of your credit cards, loans, and so on, and especially credit cards. Even if you pay off your credit cards in full each month, your credit report may show a balance on those cards because of the delay. And the total balance on your last statement is generally the amount that will show in your credit report. So if you don't want to it should show on your credit report. Pay it before the credit card close your statement. You already know based on your history when, for instance, my main credit card, they close my statement around 15th of each month. So if I don't want to see a huge number on my credit score on 12th, 13th, I pay it and then it will show a very low statement. That is a very good tip, by the way. Amount owed on different types of accounts. So, for instance, credit card versus installment loans. Which one you goes more? So, usually on credit card should be lower than your installment loans if you have car loans and so on. And how many accounts have balance? A large number of accounts with amounts owed can indicate a higher risk of overextension. I have 10 credit cards and I have balance in all of them, or all of them. That is bad because it means that you need a lot of guys to give you credit for you to live your life. So, no good. Credit utilization ratio on revolving accounts. Your credit utilization ratio on revolving accounts, the percentage of the available credit you are using, is an important factor of your FICO scores. High percentage means you are close to your maximum and then you will be in trouble. On the other hand, using a low percentage of your available credit can have a positive impact. There is a magic number here, around 30%. So around 30% of your available credit. For instance, if you have credit cards and your total available credit is $10,000, don't get statements over $3,000 because then your credit utilization ratio will be up. So magic number 30. What if I just arrived to the US, I have no credit card, no car loans because I don't have credit card, I don't have history. First tip, and I think the most important one, prepaid credit card. Prepaid credit card is available for everyone. And then just go online. There are tons of prepaid credit cards. It means that you give them a limit, for instance, $500, and then this is your limit. So your limit is already paid. So your 30% of $500 is $150. So what I did, I just started with a 500 prepaid credit card. Okay, I go to grocery stores and purchase $40. I go online and so I pay at the grocery store with my credit card. Later, go online with the credit card app and pay it. So pay this $40. And then never went more than 150. So if I purchase anything that's more than 150, for instance, $200 or $300, the next day I pay it. So my credit card will be working, I will be paying, and my magic number will always be below 30. So this is not easy. You need to have control. It gives you work. But then after some time, your FICO score is going up with a fair number. You can apply for a low limit credit card, but without being prepaid anymore. For instance, my first credit card, the limit was $1,500. So that is not a huge one, but now my 30% went from 150 to 500. So a good increase. But then after some time, you are getting better credit cards. Okay, so prepaid credit card is good. And then how much of the installment loan amounts are still owed? For example, if you borrowed $10,000 to buy a car and have paid $2,000, you still own with interest more than 80% of the original loan. So if you have a lot of new loans that you still have a lot to to pay, then the new lenders will not give you additional money, or it will give you a high interest rate. The next one, length of credit history. That takes time, usually 2 years. So usually 2 years, so on your first 2 years, the length of credit history will be low. After 2 years, it's good. So in general, having a longer credit history is positive for your FICO scores, but is not required for a good credit score because it's only 15% of your FICO score. Your FICO score consider how long your credit accounts have been established. Here the magic 2 years, including the age of your oldest account, the age of your newest account, and the average age of all of your accounts. So the average age should be more than 2 years. What does it mean? I have one credit card 2 years ago, and I have a second one that I took yesterday. So I have two credit cards. My total time will be 2 years. 2 years for the first one, 0 for the second one. So my average length of credit will be 1. So take care when opening new accounts. Your average will go down because your numerator, number of years, will be the same, but your denominator, number of credit cards, will increase. And then how long specific credit accounts have been established and how long has it been since you used certain accounts. So 2 years, start with a prepaid credit card as mentioned and think twice before close old accounts because it will bring your average down. So okay, I have my first credit card, the one with $1,500, and it's 5 years. If I close it, my denominator will go down 1, but my numerator, this 5, that is my oldest, so my average will go down. And then probably this ratio will be bad. So think twice before close old accounts. And the last one, credit mix. This is the lowest. So FICO scores will consider your mix of credit cards, retail accounts, installment loans, finance company accounts, and mortgage loan. Don't worry, it's not necessary to have one of each. For instance, I don't have retail accounts and finance company accounts. I have credit card, installment loans for my car, mortgage loans for my home. So I don't have all of them. Two things happen when you apply for multiple new credit lines within a short period of time. Creditors check your credit, so that is a hard inquiry, which typically lowers your credit score because, okay, they are checking you, so why they are checking you? And then it takes 1 year for this checking to disappear and also hurt your length of credit history because you are adding new accounts. So your average of your length will go down and your denominator will go up. If a creditor sees you've opened an inordinate number of new accounts within a small time frame, it could indicate to them that you are experiencing financial distress, whether true or not, because they will not be asking you. They will be looking only at the data. So the result, a likely denial of the loan. So, okay, you apply for 10 credit cards, and then you still need my money. Okay, man, you have 10 new credit cards. I think you are in distress, so I will not give you money. And tip, a good installment loan can be a cheap auto loan. It helps your credit mix, length of credit history, and payment history. That's what I did when I arrived here. I purchased a cheap car and I financed it. My credit score was not good at that time, was only in the fair. So I paid a huge interest rate, but the car was cheap. I even had the money to purchase in cash if necessary. But because of this cheap auto loan, it After, so when I took it, my credit score went down because of this new loan. But after 3 or 4 months, my credit mix went better, length of credit history went better, and payment history went better. So my credit score skyrocketed. It went from fair to very good in less than 1 year. And then I was able to mortgage my home. So here is this balance. Okay, I pay a large interest rate on a cheap car loan, and it gave me a lower interest rate for my mortgage. And my mortgage here, my car loan, very bottom of the camera here. So it's much better to pay a high interest here than a high interest here. Okay? And that's it, guys. That is a brief overview about uh, our credit mix, and only the new one, the new credit, that is uh, least important as well. Opening several credit accounts in a short amount of time represents a greater risk. So don't open new accounts too rapidly. I just got my first credit card, so let's apply for 10 more credit cards. Now it will not be good. Okay, so be patient, be cautious, and don't open new accounts too rapidly. Okay, guys. So thank you so much. Questions or comments, leave them here. It is a kind of complicated topic, especially if you are not from the US, like me, or if you are a student that is starting your credit score now. So watch this video how many times you need, and don't hesitate to contact me. Okay? Guys, have a very nice day, and God bless you.